What's up, YouTube? Time for another recap. We are going to look into what happened the last few days of our gap down short call, right? So if you remember from the last videos, we were looking at prediction video back down to the center W from the no gap tag. So if you come up to this beautiful daily chart here, get a little drawing tool, we had a massive big W under the 10 here, right? So that came to the no fill gap tag. So this was our short call day right here, right? So we predicted that after a tag of the gap, we would come back down to this W's center at the very least. So we had a gap down day, and then two. Excuse me. So 3 total, back to the 100 fib of the weekly, because once we get over the 100 fib, price action goes to the 1618. If it does not maintain the 1618, it goes back under, we will come back down and meet the 100 fib, right? So let's get into a little bit of the breakdown here. So the last couple days, we had a wash day, and then today we opened up super low into support. So this morning and yesterday, we had a knife day. So yesterday, we had this beautiful opened up and a gap down. So we had a gap and go to the downside. And the first thing I said about this morning is we don't have catalyst or news to insinuate us leaving a second gap. So when we opened up way down here near 443, our early trade was, as long as it was above 443, we're going to come back to yesterday's lows and fill that common gap, is what we call them. They start in a gap down and then they go up and fill in the same day. That is a common gap fill. So once we had one gap here and it showed another here, that was very unlikely to have any kind of news or data piece today or Fed speak that was going to keep a double gap push down. So a bounce day was very eminent. So on the wash day that we had back here, we knifed through everything. Deviation barely got confirmation. The 50 daily barely got a little confirmation. 10 barely got. I mean, they had intraday confirmations, don't get me wrong, but they knifed all morning, found no support. So when it came into another roll down and gap down this morning, we had to use what we had to use. So what I'm going to do is I'm going to delete this real fast so we can see the single weekly fibs we've had on for a few weeks now. Now, we said 78, 60 fib and the old algos, and they all come out right here at 443. This was our over or under level for the long. And the long today, we didn't have any metrics for a short. So it was a very interesting little fresh low break pre-market tags. We got scammed out of one here in the morning, which I didn't notice, and that would have made sense for the magnet algos. So once we opened up, if we did not hit a pre-market low, no support tag. So if we never did that, we still have a magnet too. So it picked up, pushed. So the open, we went long in pre, went long back forth here at the open. As long as it was above 443, we're going to rip to yesterday's close. That was, or yesterday's lows rather. That was a very predominantly easy trade. Now, once that trade was down, it tried to scam both sides multiple times here. So it looked like it went for a bouncing ball short off that first tag. So it hit, went high. Second tag, lower high, and even a little bit of a lower low. But something to note upon all the indicators, which we kept saying, is there's no room to go down. The VIX is way too high, and the market has a ton of support here. So the 443 is an old algo we'll go over in a second, and the weekly Fibonacci 7860. That fresh low break that it received right here for a turn, let's look at the confirmations we already had. So despite us already holding support, we had close volumes here way higher in the buy side of things. Pre the breakout. So our candles on the volume beat system work good. If we go to the oscillation here on this open, besides having really good volume, again, we didn't have too much room to dump. We could have got scammed both sides for a little while until it finally did the move. But if you look at the MAC, we waited for the MAC crosses. One thing I said over and over and over again this morning, waiting for the 5-minute MAC to cross over to go long. So we came, if you see down here from this low, we did the cross. Then I said it needed another recross, and then boop, hit its head, and then came up to the 0 line and did a lot more bonus round after that. So not only did we have the MAC working for us here in oscillation, we had a kind of a dead TTN. That was a crummy TTN. RSI, not too bad. Higher low. This is the higher high. Came back down, had a little shimmy there, but it ended up finding support and breaking back over. Now, inevitably, the tall tail sign, besides the oscillation here on MAC, RSI, and volume on the SPY's 5-minute, was thanks to the VIX. Now, we cover the VIX gaps here a lot, and if you look at the prior videos, we talked a lot about this VIX gap back here for a few weeks. that it held. So this gap right here was the one where I said the market's going to keep going up, up, and up until the VIX either comes back down, fills that gap and bounces, or loops it a little bit and causes another trade. Now, we did close that gap only to make another one right here, the 1360. So this gap up right here, 1, 2, 3 day, including today, came up, started hitting trend line resistance again, 50 SMA resistance. And that is the top of what we called for the VIX. So if we go into the 5-day, 5-minute, we had some extreme extension. So our trend line right here was top of the market, right? So look at this divergence we've had here, where the VIX was way up here, little dip, plowed up. Now look at the RSI. It's doing absolutely nothing but showing you divergence, TTM, and MAC. So once we got across right here and it started dwindling and staying underlined on MAC, lower highs, a little break of the 50, lower high, and even TTM, obviously no waves there. It was looking very good, especially at trend line rejection. So we get this trend line rejection right under 16 there, and down she went. Now, the whole premises of our play was to watch this gap. Now we have another gap. Can this continue long, or do we go back short? Like we said, the big W had already hit on SPY, right? The pattern is there. So now this gap has been created at $13.60. Now, do we do round two, where this gap gets held open, flies up, and then it has to fill, right? Price action on VIX before the market has another downside dump, right? So just for a little bit of a recalibration here of trade, let's look at the oscillation on the daily chart here. If you're looking at the RSI's fresh low that we put in down here, plays out with our big W, and then we had to come back down to the center of the W to either form support, to come back here and test a higher high and then potentially do whatever it wants to do, or we reject there, come down to the 50, stay under the 50-10, and hunt down the 100 EMA. Those are the only two plays that we had been watching. And the big W pull back to center was the last prediction that we made. That worked out fine, but now the oscillation keys here are predominantly based on mounting the zero lines. So RSI needs to mount that zero line and continue. MACD has to hold that zero line, has to continue. This cannot turn into a small wave and start dying on the daily, because that's not going to be oscillation friendly for long. So 3 red days, 1 green. We'll see what tomorrow brings, but I'll give you the over under for tomorrow. So like we said here on the intraday, I'll show you this algo as well. So way back here in the 30-30, these algos, they always tend to back test, use them as price levels. Can't tell you exactly how, because that's for a lot of my member use, but let's just go back right here. We got some big old leaky, crazy candles right here, and these guys right here, right? So after hours, was that 8:28? Yep. Of 8:28, we had pushed. Let's go back here, over those algos. See if my fat head's in the way. No, perfect. Right here. So here's the algo, and those after hours snapped up and over. Price action just mooned. Then we were short biased here on our no gap fill, because we knew that was going to tag and go down. And now she washed out. Very close yesterday, but that's a miss on the algos. Today, hit on those algos. So whenever anything has a breakover, we wait for a back test, and we can use other things like different time frames, moving averages, so on and so forth, to grab that confirmation. Now, like I said earlier, for that weekly Fibonacci we've been carrying as well, we do have that 100 Fib 161 interaction. So once this teal up here, this is 161 from our weekly Fibonacci, once the 100 right here was broken over, goes to the 1618. If it cannot hold, aka this day right here, goes back under the 1618 level, broken right to the 100 Fib, right? And then we came to 2 Fib points. We came to the 100 right here yesterday and the 7860 today. And that gave us a little bit of support. Now, what's the plan? Well, it's right back to the 100 Fib over under. Now, if this dip wants to hold above the 100, great. It's 444.72. Use it as an over under, just like we did today on the 7860 Fib of 443. So what I have is some Fib lines that might take us up, maybe even pre-high overnight, 1618. Now, if this comes up, remember, we do have a gap leading way up here. I don't know what's going to happen with that quite yet, because this is a very interesting gap play. But this moving average setup here, and we're on the 30-30 right now, does give us more of a feeling of hitting some temporary supports, popping, and kind of showing us consolidation to drop again, all dependent on these levels. So it's going to be the 100 fib, so 444.72. That is your over under watching coming into the pre tomorrow. And then when you do have a fresh low break like this, you're going to look for something that's going to be higher low related that may have a little bit more oomph for you. Now, we don't have a whole lot of headroom here, so it's got to mount the 50 SMA and the 30-30 for me in order to hold that 100 to come back up maybe to the 100 EMA. And then again, we don't really know how much higher that is, because if we do maintain under, which we had right here, the 10 SMA and 50 SMA, so red and blue, and those are the daily, those are just transported into our intraday TOS 30-30, 5 minute, 1 minute by our lovely coder 7 to 9. And what that means is it's just moving average and catch up dependent. So if we maintain over the 100 fib, great, we're going to push back up. We have the 100 EMA and back test of the 50 and the 10. If we get back over that and it's a false and it comes all the way back up again and starts rallying, well, so be it. Is tomorrow going to be the day? I doubt it. There's not a whole lot going on. It's still a holiday weekend. We don't have our week. It's still a slower week. So, what do we have to do? Well, I think we're going to get most likely a little bit of a day where it comes up and just kind of chops that 100. If we hold above it, maybe tackle up here by I don't know, just sub 446. Like that might be the high right here. That's asking a lot, I think. If it has an abrupt knee-jerk reaction where we get near highs and it's just pegged here, it will come down early and then most likely pop. But I'm leaning to the side still where we're going to kind of come into that out of that 1618 failure 100 here. So the 100 here from 1618 failure is coming off my screen right here. So once this came to here, we bounce this little area, and then it usually ends up making a choice somewhere above or below that 100 fib of that weekly. It's the same one we've had on for weeks now, so that's all we're going to look for. So it's going to be 444.72, either over under, and then we're going to look at some tall tail signs on some of the longer frames. I believe you should watch most of our FANG, Apple, and NVIDIA here. Obviously, the China news, the banning in the workplaces of the iPhone, and we could speculate that a little bit further. We'll do that on stream, but when we come into this, Apple did hold that gap down as well, a massive one, obviously off news and a whole bunch of just other areas of what Apple has been failing. So this fail right here, we do have that unfilled gap way back here on the earnings run up. So even if Apple, again, it loves to do no fill gaps. So here's your gap right here in Apple. It's the identical algo program that always runs, pushes up, hits it, no fill, washes, and then kind of decides what it wants to do after that. Now we have a double gap scenario where we have one here that's not filled and then a giant one here. We are under the 100 EMA. If this stays under the 100 EMA and comes back down, we will search for this gap down here from prior earnings. If we not see that one, we're going to get back over the 100 EMA, push a little bit, fill this gap, consolidate, and then it's going to be market dependent on what we see from Apple here. Same with NVIDIA that came up with a little bit of a gap down. Most others filled as our long in the morning here, but now NVIDIA also has a gap up here. And we have been looking for some fills back down near 400 and so on and so forth on NVIDIA. So again, we got a little bit of a top action there. If you look at the oscillation on some of the bigger FANGs, again, NVIDIA, Apple, some of the stuff that's been carrying the AI name and hype and so on and so forth, finally breaking apart. A little weird. We're going to see if a sector takes over here. Kind of holds us up, but right now crossing back to the bottom side here, you can see MAC, you can see TTM. Our side didn't quite get it, but we are on mass support. So if that support holds in the short term, hits around that 50, pops back up to even a no gap fill on NVIDIA before it wants to go down, don't be surprised, nothing goes in a straight line. So utilize those price levels on SPYs over under, and we're going to be seeing where we go on the 100 weekly fib. Now this is the first level of support. You look for confirmation from here to kind of continue, and that is it. So guys, catch you on the next.